This is Andrew Stotz of Stotz Investment Research talking about world-class benchmarking for Zhongsheng Group Holdings Limited. And let's get a little background on the company. First of all, what we can see is that Zhongsheng Group Holdings Limited is a leading automobile retailer in China. The group distributes luxury and mid to high-end automobiles from well-known brands. The company has more than 200 dealerships over 70 cities in 20 provinces. It was the first to have dealership rights for Toyota and one of the first dealerships for Lexus and Audi in China. Here's the company's share price chart, which we've seen a pretty significant recovery. The company is listed in Hong Kong and has a market cap of about $2 billion US. The company has a beta of 0.4, so it has a very low relationship to the market movement. Now, let's understand what's going on at the company. Zhongsheng distributes luxury and mid to high-end automobile brands across China through about 240 dealerships. Its luxury brands include Mercedes-Benz, Lexus, Audi, Porsche, BMW, and Land Rover, and its mid to high-end brands include Volkswagen, Toyota, Nissan, and Chrysler. The company also operates after-sales businesses that offer spare parts, accessories, repairs, and maintenance services, and other automobile-related services. Most of the group's dealerships, luxury dealerships, are located in the eastern and central China regions, and the majority of mid to high-end dealerships are in the southwestern and northwestern inland regions. Mainland China accounts for more than 90% of sales. Now, with more than 15,000 employees, the company ranks fourth among the top 100 automobile dealer groups in China in terms of sales, and that's according to the China Automobile Dealers Association. So let's look at the revenue breakdown for 2015. Luxury cars about 60%, mid to high-end cars about 30%, and after-sales service the remainder. So now that we understand the company, let's look at the world-class benchmarking score. Now, to do this, first we want to look at the leadership of the company, and in this case, the chairman from 1998 to present is Mr. Yi Huang, and he's also the major shareholder in the company. And we can see that the president and CEO from the same period of time is Mr. Guoqing Li, and he is the one that's really running the business. So let's look at how he's doing in a profitable growth score. Well, profitable growth has been stably poor, now at an 8 out of 10. That's ranked among the worst 372 of 1,240 large consumer discretion companies worldwide. Profitability is poorly ranked at 8, and growth jumped to number 2 from number 9 in the past 12 months, or the prior 12 months. So what do we see? Where did that growth come from? Well, before we see that growth, let's look at the asset utilization, which is good at 3. And the poor profit margin is what's dragging down the profitability. The company's never had a profit margin above 8 or 9. They've been at 8 or 9, let's say, ranking relative to global peers. Now, what we do see changing is that sales growth is rising, and so we can see a rank of 2. And that's a good improvement in sales, and that's driving some of the margin change, and the company's margin has moved from 9 to 8. So the margin change is driving the growth. Hopefully, if they can keep up that margin change and the growth going on with it, they'll begin to recover their gross margin, maybe up to a 5 from the 8. So relatively poor performance here. Want more? Well, just sign up for our free newsletter and get access to more investment knowledge. It's at becomeabetterinvestor.net/join. What a great name.